Okay, we're going to go ahead and get started. I appreciate everybody joining us. We've got a good crew here. My name is Pat O'Mara, and I'm with Ryan Dewan. Ryan, you want to give yourself a quick introduction?
Yep, Ryan Dewan. I run media, social media, and video production here at Invenium.
And Ryan is going to be part of the interview. He's been asking questions. We have some video answers for some of these questions. We're going to address those today as well. Again, my name is Pat O'Mara. I'm the chairman and CEO of Invenium Capital Partners. We are in the process of acquiring the security building, or the WeWork building, in downtown Miami. A picture of the building, both the facade and from a distance, is there. It is one of very few buildings that has a guarantee from the parent. The lease is with an SPV that they set up, which is the mechanism by which WeWork acts as a tenant in all the buildings that they use. But because this is one of their early ones, and because this is a flagship building for them down in Miami, we do in fact have a guarantee on the building. We're buying the building for just under $65 million with expenses included into this. And the tokenization function that is occurring is to tokenize the limited partnership interest. And we want to talk for a minute about this, where we discuss what is tokenization. So tokenization, this is not a security token, and we'll draw that distinction. A security token is a mechanism by which you turn into a security a token which represents some utility in some other way. What we're doing is we are tokenizing a security, which is a very different function. Literally, what that means is whether this is delivered in the form of paper or is it delivered in the form of a digital representation or certification of that interest that people are buying. In both cases, that in fact is a security. So what we're doing is we are creating a limited partnership. That limited partnership is going to be acquiring the security building. As we acquire the security building in downtown Miami, which has it's 97,000 square feet. It's a single tenant. We'll talk about the asset in a little bit. We are then tokenizing that interest in the limited partnership. We are taking minimum orders of 500,000. Each token represents $50,000 of value. We are asking for a minimum round lot purchase of 10. We have some pretty strong interest to date. We at this point only need 17,000 more to clear the trade, and we are looking to close this in the next couple of weeks. We will start taking orders tomorrow. We have gotten quite a bit of early interest, so we're pleased with our progress to date. The minimum that we needed to close on this is $35 million because we do have some financing already lined up. The maximum that we will take is $80 million. What we're going to do, and I'm going to walk through this process a little bit, and I'm going to again go back to tokenization and start there. The tokenization, what we're doing is we are tokenizing this limited partnership interest. The token represents what you own, that limited partnership, and whether the value of anything else goes up or down, the value of the token goes up or down, or the value of the chain that we're using, where we are embedding data into the payload of the Ethereum chain. So if Ethereum starts to lose nodes dramatically, this doesn't change that you own a piece of the WeWork building and possibly other real estate assets that are bought if we receive excess capital. If we receive more money than we need to buy the WeWork building, we will buy other similar properties in the largest cities in America, MSA 1 through 15. MSA stands for Metropolitan Statistical Area. So we'll be buying other buildings, adding this in if we get excess capital. On the subscription agreement, when you come in and say, hey, I'd like to buy a piece of this, the process is people let us know we want to gain access to the deal room. We will allow people, after signing an NDA, and we believe that they're a potential bidder, meaning they're either a qualified purchaser or a qualified institutional buyer, we will give them access to the deal room. Once they've gone through that process and they say, I'm interested in a bid, I want to see the limited partnership agreement, we'll go through an AML KYC process where we make sure that there's someone who can bid on this asset. We are building this partnership for US taxpayers, and that's what we're going to close first. We have a vehicle or an alternative vehicle, investment vehicle, also called a parallel vehicle, which we'll be using, that there'll be a secondary close for non-US taxpayers or offshore taxpayers that will be using a 3-tiered structure, investing into a blocker that will be investing into the parent corporation. That's the function. This should be relatively straightforward and recognizable to sophisticated investors. Once the qualified purchaser or qualified institutional buyer decides that they would like to have access to this, and we run this basic AML KYC functionality, we will deliver the limited partnership agreement, the subscription agreement, and the PPM to them for their review. If somebody says, I'm interested in buying, we will be using an escrow agent for cash and an escrow agent for crypto, who will take in that until we hit our minimums. You can, as you sign up on the WeWork building, you can say, I want to be an owner just in the WeWork building, which is known as the primary property. So you'd be a primary property investor only, or you can say, I want to invest in all of the properties that are in this partnership, and we're willing to accept up to $80 million in these tokenized assets. We will take investment in the form of 11 permitted currencies. So Bitcoin, EOS, Ripple, dollars. There's a number of coins that we have, Ethereum, that we've listed on our website. If you would like to bid in a different currency, you need to let us know, and we'll evaluate whether or not we can provide liquidity on that. We're using our partner, Grapefruit Trading, Mike Komaransky, who is helping us do this. So we will accept that cryptocurrency in as a form of investment at the escrow agent. We will then clear that, turn that into cash, and we will take cash from the escrow agent and invest that and denominate your capital account in US dollars, even though you invested in that. As we make distributions on a quarterly basis, we will make those distributions in the currency of your choosing. You can choose to be paid out all in one cryptocurrency, all in dollars, all in packs, whatever you would like to be paid out in, we can pay you out in that. You can actually split it between 2 cryptocurrencies as well, which is a question we heard earlier this morning. So we will be delivering your payments in the currency of your choosing, one of what is referred to as the permitted currencies under the limited partnership agreement. So that's what we're doing. We are going to begin providing access to the legal documents on Friday. We began accepting requests for an NDA yesterday, and we are now putting people into our deal room, letting them gain access as long as we believe that they're qualified as a qualified purchaser or a qualified institutional buyer. And then we will be taking orders starting tomorrow. Again, we have 17.5 left for our minimum purchase to get us there. And then we have a maximum that we're willing to accept up to $80 million. So that's where we are. We are going to have this be an interactive functionality. Foley and Lardner is some of the lawyers are on with us, and they've been the ones working with us on the legal documentation. We did have some issues surrounding as the first entity that we're aware of who's actually taking in crypto as an investment into a vehicle that is a pass-through vehicle. We did have some challenges surrounding dealing with issues for the very first time. And we have some of those dealt with in the risk factors where the SEC and the Treasury view the same issue from different points of view. And so we had to deal with that. So in order to ensure that this limited partnership remains a pass-through entity and doesn't become what's called a PTP or a publicly traded partnership, we had to go through a structure where we are having the escrow agent who is accepting it. They're going to clear that cryptocurrency into US dollars and then deliver to us dollars. And then if somebody has committed cryptocurrency, the tax obligation that they're going to have, whether it's a tax loss or a tax gain, is unique to them alone. The partnership is not accepting that. And because of what's called Rule 704.2, we are also, in an abundance of caution, going to only permit block trades once a month until such time as we get our auditors to deliver us a clean letter that says we have a 90% exclusion rule. And the key is it's not clear how the Treasury would view that capital gain, that even though it is attributed to the individual LP who invested, how they would view that partnership. And so we had to work through some of those legal issues. We are the first people on the planet to have done so. We think we've come up with the right structure in partnership with the tax and the corporate folks, and then with our own structuring people here at Invenium, that we have this structure. So for about 18 months, we will be providing liquidity on a monthly basis in the form of a best efforts basis, where we're facilitating block trades. This is not where you're putting it back to us, but where we're facilitating once a month trading, and until such time as there is a letter from RSM. In addition, we are governed, because we're doing this as what's called a 506C offering under Reg D, that we can only sell this to accredited investors, and it's governed for resale by either 144 or 144A. 144 says that you have to hold it for a year, and 144A, if you're a qualified institutional buyer, literally you can trade it immediately. So these once a month block trades you can facilitate and participate in as long as you're selling to another qualified institutional buyer. That really is our target market. We have 9 of these projects. The first 4 we've already advertised. We've got the information out there, and we are already getting significant indications of interest on those. This very first one that we're going to close is WeWork. Then we have the $78 million student housing portfolio, the $55 million water pipeline, and then the multifamily housing. Those projects will be coming out hopefully, knock on wood, closing in June. But we're focusing right now on the Miami WeWork building. So again, people who have interest will get an NDA, get you into the deal room, make sure you're qualified from an AML KYC standpoint. We'll be doing that individually, meaning manually, where we're dealing with you, helping you facilitate that process. And just because we don't think there's going to be a huge volume of bidders and owners of this, we have a single $10 million bid. We have some large bidders coming in. We will take $500,000 bids, and for people who we view as strategic, of which earlier today we already had someone asking if they could come in below the 500, but because we want a relationship with that entity, we are taking them. They are a qualified purchaser. So in those situations we will go below, but we expect to have a very small number of owners of this asset. And knock on wood, we think with the foreign investors that we're going to go ahead and hit $80 million. And again, if you want to, on the subscription agreement, say I want to be in the WeWork building only, you need to let us know that. Contact us to make sure that we can ensure that you're going to get a piece of that building if we are getting an enormous amount of excess capital, and then which would allow us to be buying other buildings of a similar type in a tokenized form, where we're paying out either in fiat or crypto on a quarterly basis. Again, this is a situation where we are trying to facilitate the ownership of real assets in a digital form. We think that we're doing something novel in tokenizing securities, where we literally are connecting the data associated with the underlying asset. So think about all of the data associated with this purchase of this building. So not only the legal documents, but also the information about the underlying building, but also the performance of the building going forth. We're literally taking that data, we're using the indexing and notary function of the smart contract to index that data into the payload of a block with a taxonomy of identifiers, URIs, Fiji's, that give global identifiers to financial instruments, which we're using the base taxonomy that Bloomberg created, to attach an identifier to underlying assets that then point to the S3 bucket, or the data bucket, that has all of the data about the building. And as we move more and more into what is called CRE tech, or commercial real estate technology, where every building has a digital twin, where all of the data of that building is maintained, and as it is being updated, whether we're talking about maintenance schedules, environmental data, who's using key fobs, who has access to the building, how we're replacing and maintaining that asset, all of that data is going to be connected directly to ownership. The reason we think that's important is digital ownership without data is valueless. Data allows us to value it, allows us to preserve the value and communicate the value of this digital instrument if we're going to exist in the digital economy. The fact that we're doing this also with cryptocurrency, we think, is the first step towards the movement to a global capital markets, where data is connected to global currencies and it's connected to ownership in a structure that can be invested in globally by good players, good actors who pay taxes, who are registered, who participate in regulated markets. So that's kind of our long introduction to what we're doing from here. I'd like to suggest to everybody that we have time for Q&A. And Kevin, have there been any questions that have come up on the chat yet, or should we go directly with questions that we had previously? All right, Ryan, why don't you hit us with some of the questions that have been asked?
Okay, so I guess starting with some of the simpler ones that you have already covered, but just in case, what are the restrictions to who can invest, and what is the minimum investment?
Gotcha. Yep. Again, qualified purchasers and qualified institutional buyers. Those definitions are out on the web with the SEC. We also have those definitions in our legal documents in the subscription agreement, just to make sure that you qualify. And then we can help anybody through that process. And the minimum purchase is $500,000.
Okay, and then some people ask, what if I want to invest in one of your deals, but I'm really not interested in cryptocurrency exposure?
That's a great question. So one of the ways in which we've dealt with this is, for some people, we have a core belief that every asset manager in America, let's call that 10,000 asset managers, are going to dip their toes into digital assets in the next 5 years. As that's the case, what we want to do is give them bulletproof assets, meaning highly performing assets that have good financial characteristics, that are throwing off cash, so that we remove that as a variable in the process of them owning a new digital asset. Now, for some of them, we've heard, hey, listen, I want to be involved, but I don't want any exposure to cryptocurrency. So if they invest with fiat, they own a digital instrument, and then we'll pay them fiat back or cash back, and then they will have zero exposure to cryptocurrency, right? Now, to the degree that cryptocurrency comes in and it bids up the asset, they could sell it at a price above, so that would be a benefit, but there is no downside. One of the reasons is to the cryptocurrency component for somebody who wants to take cash only, cash in and cash out. Another part of this is, excuse me, we have the ability to physically settle this trade. What is that? And what I mean by that is we can do what's called normal way settlement, which is we deliver the contracts, we physical settle your ownership interest. And while there is a created token that is authorized but unissued with your name on it, that you do not have to take possession of the digital instrument in order to own a piece of the WeWork building. So that would be what we would consider just to be a low functioning physical ownership or physical settlement of your participation in this limited partnership.
Awesome.
Ryan, was that too long of an answer?
No, no, I think that was good. Breaking, I do see some people coming into the chat here. Zeal says, how do you manage digital custody?
Gotcha. So how do we manage digital custody? So we can do it one of a couple ways. So these are ERC20 tokens that have what is a transfer function and a forced transfer function. And what that means is anybody who comes in and wants to buy this, we can deliver to them their ERC20 tokens to whatever wallet they have, whether that's a MetaMask wallet, any wallet that accepts ERC20 tokens. We can also set up an account with you directly at Kingdom Trust, which is an institutional asset manager. They will take you, they'll onboard you, they'll go through the AML KYC, they'll set up the digital wallet, and they can store that on your behalf. They do this on behalf of institutional clients all the time. So they do this for the Merck, they do this for the U.S. Marshal Service, they do this for the IRS. So they have some fantastic clients, institutional clients. You can look them up online, and they'll hold that digital asset on your behalf, or we can send it to a wallet that you've got. We do not have a wallet for you. We do not provide a wallet. We introduce you to people. If you're an institutional Coinbase client, you reach out to Coinbase and they can facilitate that as well. So these are basic functions of custody that we don't facilitate. And if you say, hey, I don't want to take custody of the asset at all, again, as I said, we can physically settle that. Does that make sense, Ryan? Did I cover that well? Mm-hmm. Good. Real quick, Zeal, got it, thanks.
Before that, we had someone that we passed over. They asked, how old is the WeWork building and what data is involved with it?
Gotcha. So this is a triple net lease, and I'm gonna Gudrun, I'm gonna take you to an asset that's in the deal room. This particular asset is in the deal room that I'm gonna take you to a particular page for you to look at. This is the old vault in the security building. I do want to say that this is a building that Al Capone owned at one point and ran a casino all the way on the top floor, which we think is pretty cool. But this building was originally built in 1926. It was completely renovated from the top to the bottom in 2017. Every inch of it was done. I and my team, we literally walked every floor. We looked in all the rooms. We've got some great data from folks who engineering reports, all the environmental reports you'd expect are in the deal room. But WeWork monitors the building. They monitor the inflows and outflows. And so we have foot traffic data. We have all of that data that comes in. But this is, in fact, a triple net lease. One of the things that I was talking about, Gudrun, that I want to make clear is we are gathering all of the data regarding the performance of the asset, meaning the building, where we collect all of the data that's available to be collected. We believe that in the next, these additional buildings that we have, that we are tokenizing, where we're attaching the data directly to the ownership regarding everything, whether it's the 3D renderings, whether it is the performance of the digital twin, whether it is maintenance schedules, et cetera. On the newer buildings, that data is there. A lot of this data with our system, because it's a triple net lease and it's being managed by WeWork, we will be gathering that data, but we'll be gathering that data within the confines of the data as the building owner that exists within the lease. And so we'll talk about that. This is our very first instance of it and performance of it. We thought getting a cool building with a cool lease that has some significant upside reality to it because of the neighborhood. This is 2 blocks away from where the high-speed rail connecting Tampa, Orlando, and West Palm is going to come in. The entire neighborhood is turning, and we believe we own one of the real anchor tenants in that part of Miami, which is a live-work part of the town. It's very millennial oriented. It's very hip, and it's a fantastic tenant. So that's more than you were asking, but good or not, hopefully that answers your question. And let's go back to some other questions. So Bill Kirk, are there any old safes in the building that Geraldo Rivera can open on live TV? There are not. Thank you for that question. Moon, you asked a question, what issuance platform are you using? We're using our own technology, the WISE system, Workflows for Investment Services Engine, that we ourselves built. We started building that in 2017. Our first issuance on that platform was in December of 2017. We did 8 transactions for just under $50 million last year in direct transactions. The majority of them were arm's length transactions where we were placing tokenized whole loans that we were placing. But now this is one where we're doing a self-issuance, 506C. We're the general partner, and we are issuing it to continue to prove out our software as a mechanism to tokenize financial instruments or securities and attach the data of the underlying performance of the instrument. We will be having our first third-party user use our software in Q3 of this year, where they're tokenizing a portfolio of several hundred loans and begin using that to connect the data directly to their ownership. And this is not for new issuance. And we have our next 9 deals lined up. 7 of them are on our website that you can see. All right. Are there any other questions? Those are some fantastic questions. Moon, did I answer your question? Want to make sure that you felt like I got that for you. Fantastic. All right, thank you.
Going back to the risk part of the deal,
sure.
Some people have asked, is there a way that I can distribute my risk by breaking off my investment across all 4 of the deals?
Yes, so if you say that you want to invest $500,000, but you're going to invest $500,000 not just in the WeWork building, but you'd like to do it in all 4 of the deals, that is a reason that we would allow you to break below the minimum of $500,000. Again, as long as you're a qualified purchaser or a qualified institutional buyer, we're willing to accept that, where someone would put it in $500,000 across all 4 of these 4 initial deals.
Awesome. How about, what if I want to sell some of my units in 6 to 12 months?
Absolutely. If you're a qualified institutional buyer and you are selling to another qualified institutional buyer, and this is the transfer function, meaning if we don't recognize the buyer, this transfer function there has to be an approval. We have one of the top 10 accounting firms in the world who's agreed to act as our transfer agent, or we can act as the transfer agent directly, an issuer or an exchange. So we've designed our software with that kind of functionality in there, where we need to make sure, for the sake of the exemptions in this limited partnership, that we ensure that we don't break what's our 501c7 registration as a fund, which is how we relate to the SEC. And so with that, we need to make sure they're a QUIB or a qualified purchaser. If it's a qualified institutional buyer selling to another qualified institutional buyer, they can sell to them, they can sell to them day one, and we'll do that in that monthly block transfer until such time as we've cleared this issue about how the Treasury will view the sale of that cryptocurrency and how they'll view that as far as going towards our 90% good income for our real estate exclusion, because we do not want the partnership to be taxed double. So again, this is a mechanism for the first 18 months. We're only going to facilitate once a month block trading. And so for QUIB, it's immediately they can participate in that. But then for a qualified purchaser, they have to wait till that 144 ruling, that period has ended. And so I'm not going, there's a fair amount of details in that, but I'm not going to get too far into that.
Bill Kirk also asked, what are the limitations or restrictions on the transferability of the token and the investor is provided?
Gotcha. So it's got to be, this is a transaction that's exempt from registration. So as I said, it's got to be to another QUIB or to another qualified purchaser. If you are an owner of this digital asset and you have lost your private key, this is not a bearer instrument like Bitcoin, where if you lose your private key, it's lost, right? This is a digital instrument where we are connecting the digital identity of the building, meaning its performance, how the building is, the cash flows, the rent rolls, the performance, the environmental reality, who's using the building. All of that data is connected to the ownership and a digital instrument so that it can exist in a digital economy funded by bearer assets like Bitcoin, XRP, all that kind of stuff. But in fact, if you lose your private key, you would file an affidavit of lost key. Depending on whether or not we believe that you have a lien on that limited partnership, meaning you use the limited partnership to secure a loan to do something else, that the person who lent to you, who many times lien a wallet, right, and there's a split key reality there and all those types of things, we have what's called a holder in due course function, and we may ask you to post a bond. But if it looks like you own it free and clear and there's no liens on that at all, what we will do is literally we can explode that token or burn it and then create a new one. Because the point of this is not for this to be a bearer instrument. These are real securities. They are exempt from registration. And we want to have liquidity, which means we have data so that you can solicit bids. That means the data is connected to the ownership, and that's what we're doing. So that's a really long answer, Bill, to what you were asking, but hopefully that gets it. Good.
I have 5 other questions, but you want to save them for further on? Or
yep, let's see if there's any other questions here. Moon, I think you, hopefully I'm saying that correctly. All right, let's keep going. If there's any other questions, please raise your hand and throw them up in the chat. And Ryan, why don't you give us 1 or 2 more questions?
Sure. What if I'm already long on some cryptocurrencies? Can I use them to bid on these deals?
Absolutely. So if you're long a cryptocurrency, in fact, you can bid in that cryptocurrency. Your bid is denominated in that cryptocurrency. Then we have a conversion function, again, where we're using grapefruit trading to convert in any of the permitted currencies. And if you'd like to use another, you just have to come to us and we'll make sure that we can lay that off, because your capital account in the partnership is denominated in dollars. That's important to us for a number of tax reasons. And then what's going to happen is we will then operate the business, and your ownership is denominated in dollars, but we'll then pay you in any of the permitted currencies that you'd like. So if you are long and you have a capital loss from where you got into to the currency, when you invest, you harvest that loss. When you if you have a gain, you will get that gain. All of the rules regarding the harvesting of loss, etc. So if you come in and you buy this token, we do that block trade within 30 days, and you come back in to your cryptocurrency, and within the 30-day window. We don't know, because this has never been done with cryptocurrency before, but we believe all the other rules surrounding transfer in and out in the 30-day window, if you're harvesting a loss, will still apply. And we've built this structure with all of those things in mind, but the idea being the tax gain and the tax loss will be passed on to you. And we wanted to make this vehicle, this digital vehicle that accepts cryptocurrency, to be the most tax efficient structure possible for both US investors and offshore investors. And we went to great pains and great expense to do that.
What happens if you accept my bid, but the whole deal does not clear?
Then that's all going to be held in escrow, and it will be delivered right back to you, right? So if there's a change or a fluctuation in the currency, the escrow agent is not going to liquidate any crypto, and we're using Paxos for this. Paxos is not going to liquidate any of the crypto until such time as we've met the minimums. Now, we're pretty close, and we may meet the minimum before we get our first dollar in, and then the money will come in right now. But we're feeling pretty good about the fact that the money comes into the escrow, and it's held there until such time as it breaks, and then it'll be released to us. But if we don't break escrow and we can't meet the minimums, both the cash and the crypto would go right back to the account that sent it.
as an income generating investment, how will you pay out these incomes?
Gotcha. So we will have a 1 month lag. So we have a month lag, and then we pay out the quarter, excuse me. We have a 1 quarter lag. So we collect the income for the quarter. The following quarter is when we pay that out. So we'll be making these quarterly payments, and we'll pay that to you in any way you like, whether we're talking about any of the permitted currencies or the cash, or it can be split. And so this is something, and this is not set one time and you can't move it again. So if you say, hey, I think right now Bitcoin is low and I like it, pay me in Bitcoin, we can do that. And then the following quarter you want a different crypto, or you want fiat because you think there's been a run in Bitcoin and you want to be long another currency that you think is undervalued, we're happy to do that as well. So you can keep it the same the whole period, or you can change it. But any of the permitted currencies, dollars or crypto, we can pay out on, and we will pay out. And as this says, right, the projected NOI for 2019 is 3.4 million. So we have some pretty good income. And again, this is backed by not only a deposit, which is an irrevocable letter of credit from Deutsche Bank that is secured by WeWork, the parent, but we also have a guarantee on the lease from the parent, and that guarantee and that deposit does burn down over time. But we have 12 years left on this lease.
I think someone asked a similar question here, but concerning market volatility and then the conversion over time. Gundan, what is the lag time to getting the crypto as a quarterly payment, etc.? In other words, the price the crypto is so volatile that you can know what the dollar conversion is.
Gotcha. So everything we do internal to the partnership, Gudrun, fantastic question. Everything we do internal to the partnership is dollar denominated. And at such time as we make payments out, we do so in the currency that you request. So if you say, hey, listen, I gave you Bitcoin, I want Bitcoin back, great. What we're going to do is at the time that we are going to make the allocation to you, so the following quarter, we've made the allocation of what it's going to be. So let's say you have 50% of this asset and you own 3.4 million. So 3.4 million is the net income, you own 50%, 1.7 million is going to go to you. And divided by 4, and I'm going to use simpler math, so let's call it 425,000 is going to go to you. That 425,000 we're going to deliver in Bitcoin. We will convert that into Bitcoin at the stated at a spread to the daily mid for Bitcoin that day. We don't collect that spread. Grapefruit Trading does, but they're going to do all of this conversion for us, and then we deliver that to you that day. So you will get a spread off the daily mid on the day that cash is delivered to you. So that's how we make sure that the movement of price doesn't affect us. Doesn't that make sense? By the way, we are accepting crypto. Kevin Cutterback, your statement is not correct. We are not accepting crypto via Grapefruit Trading. We are accepting crypto directly, and then we have a direct Invenium to Grapefruit Trading relationship, but they're the one who converts it. So Kevin, if you could update that statement that the OTC desk who's converting for us is Grapefruit Trading. Zeal, we act as a manager of this, and so there is an origination fee as we put this together, and then there is a management fee for us to manage this electronic instrument that is paid. And so we're going to get 80 basis points a year, or 80% of 1%. So and that's referred to as 80 basis points of the value of the capital. So that's what we make. We make an 80 basis point charge or fee, I should say. And then at origination, there's a 4% origination. And that 4% origination is going to go, 1% of that goes to us, and then 3% goes to whoever is bringing the capital in. If that's a real estate agent or a broker dealer that we have a distribution arrangement with. So we have somebody on this call who's representing quite a few folks from both New Zealand and Japan who will be coming in, making an investment. What we'll be doing is be paying 3% or that origination fee to them. And then we would be taking 1 in all case If we're the ones generating the investment, we keep all 4. So Zeal, that's how we're paid, and that money is laid out in the limited partnership agreement as well as the PPM. All right, let's see. There, I think there was one other question. Gudrun, okay, move quickly. Hey, Gudrun, did I answer your question on the movement of crypto? I just want to make sure that you feel good about that one.
Same as Zeal.
Yeah, I think Zeal said he got it. And Gudrun, thank you for your question. Those are fantastic. What other questions did we have ahead of the call?
This one you touched on a while back, but might want to refresh, and it's, can I settle the trade physically if I'm not interested in the tokenization aspect?
Absolutely. If you just want to own a piece of this asset, or you want to own a piece of this pool of assets, owning commercial real estate of this type in MSA 1 through 15, which is what's going to happen if we get excess capital. We are willing to accept up to $80 million of indications of interest that we will go ahead and take in. And if we have excess capital, we will invest it beyond just this WeWork building. And so if you say, hey, I want to own a piece of that, what you can do is you can give us fiat. You fill in your subscription agreement like everybody else. You give us fiat. We'll take that fiat and we'll deliver fiat back to you. At any given moment, you only own physical documentation of your ownership, and it'll be settled like you would any other real estate investment you've ever made in your life. So it'll be settled to what's called regular way settlement or physical settlement. And at any point, if you say, I want to now own the electronic instrument, which would allow you access to all of the data in the data room, if you want data in the data room and you have physical asset, physical ownership, we would just give you unique sign-in credentials to go view the deal room, but your ownership can be settled physically, and that's not a problem at all. We have some institutions that we have done this with before, and we have an ability to do a transaction that is partially digital and then partially physically settled, which is, we think part of this bridge that we provide between the traditional economy where it exists now and the new digital economy and where it's going.
And just to piggyback off of when you say like settling this real estate asset like you've settled every other real estate asset, some people also want to know generally what's different about this commercial real estate deal than traditional real estate deals.
Fantastic. Yeah, that's a great question. The primary, this is a real estate deal. You own real estate, but when you own real estate and you have a minority interest in a limited partnership or a real estate deal, and the data is not connected, the longer that assets, and this is also definitely true of private debt, right? When you have, the longer that asset goes from the snapshot of the last time it was fully underwritten, the data goes stale. And what we're doing is we are gathering this data, and that other people are gathering the data as well. But what we're doing uniquely is we are, as the data is gathered, we literally use the indexing function of the smart contract and that notary function where we timestamp the data. We can say this, all of this IoT data that's coming in, we can say this is the exact machine that generated that data on this date, and that is immutable. And what that does is, rather than doing one audit every 5 to 7 years when you fully underwrite that transaction, you've got this daily, weekly, monthly audit of the data that is providing an enormous picture that can not only help set the price, preserve the price, and protect and perfect the pricing of that asset so it is more liquid. Because the fact that it settles and clears quickly does not make it liquid. What makes it liquid is the fact that there are bids. And what you need for bids is you need data that is real and is good.
And I think you incidentally also answered another question, but just to clarify, Gudrun asks, what exactly is the smart contract?
Yeah, Gudrun, thank you. That's a fantastic question. We have a belief that smart contracts are pretty dumb, right? And so smart contracts have limited functionality, and a lot of people are trying to shove an enormous amount of functionality into a smart contract. We believe that that's an interesting data point that in 4 to 5 years will have real value. What we're doing is we're using the smart contract today for 4 primary functions. Number one, the ownership, right? Who owns what? So we manage the who owns the tokens. Number two, so the transfer function, the forced transfer function, all this audit. Number two, we facilitate the indexing of the data as it comes in. So we use the write function, W-R-I-T-E, function of the smart contract to write into the payload of a block data that includes a universal, a global identifier for financial instruments, a URI that points to where, which is a little bit more of a universal pointer than a URL, but it's like a URL, a URI that points to where the data is sitting, as well as basic information about the data collection, when it happened, et cetera. And then we put in the cipher and the hash so that we can forever have that notary function to know that that data hasn't been manipulated. So we use the write function to do that. And then we use that indexing of the data and the writing of the data and the notary function of the smart contract in order to connect the data to the ownership. So that's what we use the smart contract for in relationship to other high functioning on and off chain formulas. And as reg tech and identity tech gets better, we will embed more data into the smart contract or more functionality into the smart contract. But for now, we think this is the highest and best use of it.
And you answered Bill Kirk's question also.
Okay.
He asked, if we were taking advantage of the blockchain using the right function, you are.
Yeah. So this function, this audit function, where we preserve data, is what gives value to the digital instrument, right? This is the relationship between the data and the digital instrument itself is what we think is going to be transformative in how capital markets actually becomes transformed by digital instruments. And Gudrun, what data are you tracking that is coming in?
And someone else also asked for examples on data that's being indexed. So that's the same.
Gotcha. So Gudrun, if you don't mind, I'm going to give you two answers to this. I'm going to give you an aspirational statement, and then I'm going to give a today statement, right? Because this is an evolving reality as a new company. So the aspirational statement is when companies are building new developments that are skyscrapers, before they move a single stick, they build a digital twin to the physical asset. So that is in a CAD machine, it's three-dimensional, it's got all the data. And before something actually happens to the physical asset, they want to make sure it's done to the digital asset first and make sure it works. And so this is whether you're changing an elbow on two pipes, whether you're changing out the filters in the environmental systems. Thank you. Literally electrical, whatever it is that you're doing, that you're maintaining, you do it to the digital twin first. So what we'll be doing is capturing all of the data of the physical as well as the digital twin that holds all of the data as it reinforces that. So whether you're talking about daily readings from the environmental systems, from the security systems, from voltage meters, all of that data, that to the degree that it's able to be captured over an IoT functionality, we're going to do that. We're going to index it and we're going to relate it to the digital twin. When we're talking about the WeWork building, we are going to be gathering the data as listed in the lease that we can extract from WeWork, and we preserve it for the preservation of that. It's a more limited data set because it's an older building, and the data, it's a way that we're going to get started. Does that make sense? So it's not fully accurate. So so all the data is going to be preserved off chain, but it's going to be indexed with the pointers and the validation function that are on chain. So Kevin Cutterback, your question that you asked, most data will be off chain, but the indexing timestamp, the pointers, the URI and the URL, the validation function, the cipher and the hash are all on chain. That's true. And we can use any chain. We're chain agnostic. We can do that. But all of that data now, because we use the smart contract, which controls ownership, and it indexed 100% of the data, all the data is forever linked to ownership, which protects the validity of the data. And you've got this perpetual, the longer this digital instrument has existed and the asset is performed, the more valuable it's going to be because the asset can be protected because the data is perfected because of this audit trail, right? We know the actual performance of the building, not somebody's representation of the performance of the building, right? The trust function is clear, right? It's on a distributed ledger. We know exactly what's happened at what time, and the data, the trust function of the distributed ledger has been passed on to the data on the performance of the asset, which is now connected to the digital ownership.
Zeal asks, if I go for a regular settlement, non-digital, where do those digital tokens go?
So, you know, they don't actually go anywhere, right? The digital token as a thing is a representation of what the smart contract owns. So the smart contract knows that you're the owner, but there's no wallet connected to you, so there's no token in it, right? That when you actually talk about tokens that are in a wallet, what it is it's giving a representation of what the smart contract says, who owns what, right? That's like how it works with Bitcoin, et cetera. So there is no digital token sitting somewhere else. There's a smart contract that says when we affiliate a digital wallet with you, then that would have tokens in it. But until that time, they're just authorized but unissued.
Bill Kirk says, he asked a question about security issues with preserving the data and tenant information.
Okay, so all of that data currently it can be anywhere in any S3 or data bucket that's used. Right now we're using AWS, which is our form of security. If that security, you know, it goes to all the highest standards, right? And AWS is handling that security in a way that a company of Invenium size couldn't, right? And so that's what we use. And we use multiple authentication, two-factor authentication to get, you know, for people to get in, et cetera. So we're using all the best bells and whistles that AWS has. And none of this data is on chain. The audit function is on chain and the ownership function is on chain, but that's just a wallet, just like it is with Bitcoin, right? So we don't know who owns what wallet. That's something that we own off chain that relates to a real person. Gudrun asked a phenomenal question. Who's doing our predictive analytics, right? So our chief data scientist is Kevin Cutterback, who's been putting in some of the comments here. And Kevin is fantastically smart. He has been in the data science since before it was called data science. When he got his degree at Northwestern, he got his master's degree in decision science. And so he's been in the data science business for a long time for a number of different entities, and he is facilitating all of that work on our behalf, Gudrun. And I think before we begin using the data pool optimally, which is our long-term play of Invenium, we have to gather the data pool and create it. And that's what we're in the business of creating digital instruments with data connected to them. And we're building the software that soon we're going to be giving away to everybody for free, so they can tokenize data, tokenize instruments with data connected, and then we will have that data that we can then use predictive analytics. We can use AI, machine learning. We can start doing matching algorithms. You know, and so if you kind of think of the progression, right? What does that look like? I mean, it's, you know, before Carfax, right? Where before with used cars, you weren't sure, was this a lemon or not? Why is this guy selling? And the only time you really felt good is if he was moving out of the country, so he had a reason to sell. Otherwise, you were suspicious of it. Well, Carfax gave us good data, right? And so that adverse selection reality, which still exists in private debt and still exists in minority interest real estate, we are solving first and foremost with giving data about the building. And then once we do that, we can begin going into what Zillow did, right, which is pricing, right, because we've got really good data. And then the next step is where you can actually play the matching and the dating game, right, where you connect up, hey, the right buyer for this asset is this person. And so those are coming down the pike. but that's what Kevin Cutterback does for us as our chief data scientist.
Will the general partner potentially have more access to off-chain data than the limited partner?
Yeah, so what we're doing is we're structuring the data for other really, really smart people to take their machines into it and work it. We are not going to try and reinvent the wheel, right? We're already talking to a number of different people who do that kind of work. Gudrun, that's fantastic, right? All we're doing is creating the data so that it can be, that we can have other smart people do that. We are not intending to reinvent the wheel. But if we control the data and we own the data and the data is being created in our systems, man, that's valuable, and that value inures to the owner of these tokens.
Really good questions.
Yeah.
And a nice shout out to Kevin Cutterback.
Will the general partner potentially have more access to off-chain data than the limited partners? Potentially, they will, because there's some data for privacy reasons we may not be able to share. But we're going to be as transparent as we possibly can be about the data that we're sharing with you. So you're the partner. We're going to do that unless we're restricted by law or contract. We'll be sharing that data. All right, guys, we are at exactly 1 hour. Sean, thanks for giving us that heads up. I'd like to ask, are there any, yes, we can be transparent about the data we can't share. Guys, if you'd like an NDA, please let us know. If you'd like to give us an indication of interest or get on the phone and walk through the legal contracts with us, we're going to do that. We'll probably do one more webinar next week where we literally walk through the legal documents. That'll be an invitation only, but we can also do that individually with anybody who wants to do that with the limited partnership agreement or the PPM. We're excited to be here with all of you. We're excited about the interest. I think we've got people, we got at least 4 people from Switzerland. We've got a couple people from London. A couple have actually started to drop off already. We've got people from all over the US, and I know that we've got the callers in representing some Asian clients. So thank you for doing that, for being here, and we're excited. I do think that we're gonna end up probably with between 10 and 40 owners of this limited partnership. I don't think we're gonna have hundreds. And it's possible, depending on the size of the bids, we might be under 10. But at any rate, this is where we're at, and we're excited. So please, folks who are on the phone on the webinar, please let us know. Ryan, any last comments?
I was just going to say, if you have any more questions, feel free to shoot them into us. There's going to be a recording of today's webinar up at some point. And then check out our social medias at Invenium Cap on Twitter and Invenium Capital Partners on LinkedIn. We just did a Q&A video series where a lot of these questions got answered by Pat, and they're going to be on our YouTube channel, which is also Invenium Capital Partners, and social media.
Fantastic. Thanks, everybody.
Thank you.